Today, we will talk about the cost of labor, a key aspect of running a business. The cost of labor is the sum of all wages paid to employees, as well as the cost of employee benefits and payroll taxes paid by an employer. The cost of labor is broken into direct and indirect costs. Direct costs include wages for the employees that produce a product, while indirect costs are associated with non-production labor. When a manufacturer sets the sales price of a product, the firm takes into account the costs of labor, material, and overhead. The sales price must include the total costs incurred. If any costs are left out of the sales price calculation, the amount of profit is lower than expected. If demand for a product declines, or if competition forces the business to cut prices, the company must reduce the cost of labor to remain profitable. Direct labor costs are those expenses that can be directly traced to production, such as wages for workers on an assembly line. Indirect labor costs, on the other hand, are associated with non-production labor, such as employees who maintain factory equipment. Labor costs are also classified as fixed costs or variable costs. Variable labor costs vary with the firm's level of production, while fixed labor costs can include set fees for long-term service contracts, such as repair and maintenance agreements. Indirect labor costs can be difficult to allocate to the correct product or service, leading to undercosting and overcosting. If labor costs are improperly allocated or evaluated, it can cause the price of goods or services to shift away from their true cost and damage profits. While the cost of labor refers to the sum of all wages paid to employees, it should not be confused with the cost of living. The cost of living includes housing, food, transportation, and is specific to a geographic location. Demand for housing and food can drive up prices, leading to higher cost of living in some areas. Here are two key takeaways. 1. Costs of labor can be categorized into two main categories: direct, production, and indirect, non-production, cost of labor. 2. If the cost of labor is improperly allocated or evaluated, it can cause the price of goods or services to shift away from their true cost and damage profits. Hope this would help. Thanks for watching.